Good afternoon, everybody. Want to say hello and tell you how much I miss you. I wish we could be together, but under the circumstances, we're not. And I've had a few questions about this particular assignment 7-4, figuring out the average daily balance. So I'm going to just walk you through an example here, and hopefully that'll clear up some of your questions. If you still have questions after watching the video, feel free to reach out to me and let me know. I've been using video chat through Google Meets with other students. It's worked out pretty well. So just let me know if you need a little bit more help. So let's go ahead and get started. I'm going to walk you through the concept check question that's on page 270, or I think it's the third page of that particular packet. And so what we have here is a kind of a summary of an account statement that goes from September 9th through October the 8th. And you can see that it lists any payments that are made, any purchases that are made, and based on those transactions we calculate an end of day balance. And then to calculate the average daily balance, what we do is take that end of day balance, multiply it by the number of days that we had that balance, and at the end here we'll just add up all of these to get a total balance. And then down here we'll take that number and we'll take that number here and divide by the total number of days to get an average daily balance. So let's see how that works. From 9/9 to 9/15 there were no transactions, no payments, no purchases. So the daily balance, end of day balance, stayed at $500 for 7 consecutive days. And so you might think, well, hey, wait, from the 9th to the 15th, that's only 6 days, but you have to include the 9th as a whole day. So when you count that on your fingers, the 9th, the 10th, 11th, 12th, 13th, 14th, 15th, that actually turns out to be 7 full days. So I'll multiply 500 times 7 and I get 3,500. And so on the 16th, we made a purchase of $100, so that made the balance on the card, on the account, go up $100 from $500 to $600, and that occurred on one day. So that end of day balance is $600 times 1, and so I'll just multiply those two together, and that becomes $600. So now for from the 17th through the 21st, there's no activity. So the end of day balance remains what it was for the previous day, which is $600. From the 17th to the 21st is a total of 5 days. Remember, you have to include the 17th, and if you count on your fingers, that turns out to be 5 days. So 600 times 5 is 3,000. And now on the 22nd of September, we made a payment of $150. So that causes the end of day balance to go down. For payments reduce the amount of your balance. So 600 minus 150 is 450. And that lasted for 1 day, so we'll just translate 400 times 1, 450 times 1 is 450. And now until the end of the billing period, which apparently is October 8th, there were no more transactions. So the end of day balance stayed at 450, and that lasts for a total of 16 days. Okay, so 8 days in September, since this goes from the 23rd through the 30th inclusive, and then 8 days in October, so that's a total of 16 days. So 450 times 16, if you do that on your calculator, I think you get 7,200. So now we're ready to add up these number of days. 7 and 1 is 8, and 5, 13 plus 1 is 14, plus 16 is a total of 30 days. and I'll add up all of these values using my calculator, and I get a total of 14,750. Okay, so this is my sum of balances here. So now I'm going to take this value, 14,750, I'm going to transfer it to here, and I'm going to divide by the number of days. See the divide sign there? Divide by 30. And if I get, if I take 14,750 divided by 30, then I end up with $491.67. $491.67 is the average daily balance for the period from September 9th through October 8th. And so now what we would do is we would take that average daily balance and multiply it by the percentage rate on the on the account, and find the finance charge for the month. So you can kind of see that example down here. The periodic rate is 2%. Now this is a different example and the values are different, but the average daily balance in example 1, which you have on the previous page, the average daily balance was 117.05. The rate is 2%. So when you multiply those together, you get a finance charge of $2.34. And so that would be added to the account at the end of the billing period. So that's how we calculate average daily balance. Hopefully that is enough to get you started. I will give you a hint. When you get over here to number 18, and you've got this this example here, this is not the complete record. Notice that the billing period begins on April 1st and it ends on May 1st, and the first transaction didn't occur until April 11th. So you're going to have to start out kind of like we did up here. For several days in a row, the end of day balance was the previous balance. So we're going to start out at 175 for the first few days of April until we have this first transaction. Okay, don't worry too much about the transaction date. Posting date means this is the day that it is brought to the account. And so that's the one we'll use in terms of tracking by calendar. These days here, sometimes there's a delay. Obviously, there's a delay in the time of the purchase on April 1st to the posting date. You can get kind of confused if you bounce back and forth. So I would encourage you just to use this posting date as you kind of lay out these dates for the billing period, which is April 1 to May the 1st. So with that, I'll stop here and I'll post this. If you still have questions, feel free to hit me up on Classroom or an email. I'll be glad to help out. Hope things are going well. If you need to talk to somebody, reach out to me or someone else. We want to make sure you guys are safe, even though we're not together every day. So look forward to seeing you as soon as we possibly can, and stay in touch. Talk to you later.